everyone. Welcome. Day 4. You've all made it, just about, I hope. So I'm Sophie Jackson, and I'm very proud to lead the Treasury Day Group's global activities. And I'm very happy to be here today with you all and with my amazing lineup of panelists. So let me please introduce them before we kick off. Deya Innab, Deputy CEO at Eastnets. I want to move on now to Deya. Tell us a little bit about how digital payments are impacting international trade relations.
Thank you, and thanks for having me here today. Of course, digital payment has fundamentally reshaping the trade relationship and redefined the status of countries on the trade network globally. There are empirical studies shows that countries with enhanced infrastructure, digital payment infrastructure, they significantly improve their trade status by streamlining the cross-border payments, enhancing the efficiency, transparency, reducing cost and time. All this, of course, has a tremendous impact on their trade status. And according to WTO, the digitization of payment alone will actually enhance the efficiency of trade by 20 to 25%. So imagine the profound impact on smaller economies and emerging countries. We have seen countries in Africa and Middle East and Southeast Asia. They are actually leveraging their payment network to have an access to the international trade market. They have really stood up for themselves, and they have created a better situation for them in the trade market, and they even gain some competitive edge in some international market. Of course, you can see also because how important the digital payment when you see different initiatives like the South Africa payment system, where there is a regional let's say, initiatives to interact between countries within one region to streamline the trade, to have a better, especially they are using the local currencies, which will enhance the liquidity, reduce the risk of liquidity, and enhance the efficiency of trade. Of course, there's one important aspect to that also. We cannot ignore the dominance of the US dollar in the international trade. And we cannot ignore that it is closely coupled with SWIFT. So this will give a very significant power or geopolitical power to the United States, especially when it comes to enforcing sanctions. Yeah. And having this ecosystem or this status actually pushed people towards having alternative payment system. And this is what we are saying in APAC in specific. If you look at the the China's RMB promotion through the digital yuan or through the EPEX, the network that they have. So this is basically to enhance their trade position, especially along the trade and the Belt and Road initiatives that we have. The more countries we have that they're pushing towards alternative payments, the world we will see that the trade landscape will move towards a multipolar a trade network rather than a centralized a trade ecosystem or network. And this, of course, it has a very advantages in terms of being resilient, giving the flexibility for countries to navigate through the geopolitical issues and trade war tensions and all such things. But at the same time, it creates a fear from another type of fragmentation, another type of trade-based financial crime, because the different maturity level of these systems with different level of regulation of countries, this will bring another risk, which is a different subject that need a different session maybe. But it's fair to say that digital payments enables to have a more equitable trade distribution, distribution for trade evidence globally, and really created a balance towards the international trade relationship.
Amazing, thank you so much. You've hit on so many amazing points there. Deya, what's being done to address some of these challenges that Carlotta's just outlined for us? Are there any inspiring initiatives so that we can galvanize rather than just tell each other the things that are going wrong?
Yeah, I think it's fair to say that digitization has been a priority for trade finance for many years. for decades, but it has been held back, as the Qatar said, with all these obstacles in regulation, standardization, fragmentation, technology. But we have to also to admit that in the events and the circumstances in the past 4 years has brought this digitization back into focus like never before. And we have seen that the trade finance, along with the digital payments ecosystem, they are undergoing a dramatic transformational, and it is the nice thing that it is driven by the enhancement of regulations, technological innovation, and there is an obvious collaboration between different bodies. She mentioned that there are different players, and when we look at who is today active on doing and solving and bringing a digital trade ecosystem together, when we look at ETFA, SWIFT, ICC, BAFT, even the International Containers Association, so they are all together working together and committed to bring this into life. As you said, digitization of documents is very important, and that's why the standards by ICC and ETFA is very important. There's a lot of, they have identified the documents that we need to digitize. But the most important aspect of all this is to be supported by a legal framework, to give the digitization the legal empowerment and to make it equal to paper documents so it can be accepted. And what they call it electronic trade law is very important, like the MLATR framework. And when we look at the experience or the initiative done by UK last year when they adopted this law for the UK Electronic Trade Document Act, the digitization of bill of lading across the Commonwealth country, it is expected to bring 6.1 trillion enhancement in trade by 2026. And this is just the beginning. So there is a lot of things to happening. And to get the benefits of linking digital payments with the entire trade ecosystem, the financial institution will see the benefits really, in my opinion, once we have the digitization of the bill of exchange, the promissory note, because this will track, this will digitize the payment safe and link it with the movement of goods as well. So this will give a different aspect to the whole digitization. Of course, the digitization is not the only thing. When you look at the smart contracts, containers, when the International Containers Associations, they use the Internet of Things to really put a tracker to all the containers to track the movement. So imagine all these technologies. You need really to use it, to have the right systems to grab this information and use it in different ways. And that's why the importance of let's say, the standard protocols in communication through APIs. For example, SWIFT, in collaboration with the ICC, they have developed the first ISO 20022 compatible what they call it, corporate to bank API for electronic trade guarantees. And this is very important, and this is just the beginning, and more to come. So imagine when you connect to all these building blocks of the trade ecosystem, then has the right platform, API enabled, to extract all these data, then it is up to you how to use it. If I'm a compliance department, I will look at it from trade-based financial crime. How can I really track and be able to understand the complex typologies of money laundering, like the over-invoicing, under-invoicing? So there's no limit for how the technology, once you have the standards, the law to support it, and we all work together and with the APIs. So I believe in the coming few years, it is not about digitization for documentation or digitalization of processes. It's more of a new era. It's a new trade integrated ecosystem that we all have to be ready for.
Amazing. Thank you so much for bringing that to life with some solid examples there. Deya, I want to come to you. We sadly are running out of time, so I want us to now think back to our beginning of this conversation and looking ahead to some of our intentions. What will the open global value transfer system of the future look like for you?
This is a very important question. I can dream about whatever I want. So actually, we've heard everyone talking about the CBDC, the decentralized finance, of course, the conversions also of big tech. All this will really reshape the way the trade looks like. I believe, and it just makes sense, that the global value transfer will adapt a hybrid model between centralized and decentralized. So it is a blend between the two benefits of two systems, where you are gaining the transparency and the fast of transactions while not losing the important regulatory oversight, of course. So bringing this system together is very important, and that's why the CBCD might be a solution, because it really has the characteristic of a decentralized financial solution, but it has the governance framework oversighted by the central bank. Of course, these two systems, the decentralized and centralized, have to really coexist together, and we can see that the interlinking between these two systems is very important. And I'm happy to see that SWIFT have the SWIFT CBCD's central bank digital currency interlinking API, and this is just a start. I believe this will increase more. A very important aspect to all these transformation is how the regulator will act toward this, because if you look at the regulator today and the entity-based regulation, with the decentralization that we're having, especially with more nations are declaring the independency of their trade network, the regulations has to it makes sense to evolve into more purpose-led regulation, which is focusing on transactions and activities rather than the entity or the country. And this way, whoever is doing the transaction from any platform in the trade ecosystem, they are protected by the regulator. And this is what will make the regulator more inclusive. So it is in protecting everyone. And this is very important, but this needs a lot of harmonization across different jurisdictions, more collaboration, all to come together. We cannot also ignore the importance of interoperability between all these things. This is key things that we need to bring everything together, and only then, when you bring all these together with the digital payment, with all the information, we should really acknowledge how beautiful is the data today. If you look at the JPI data that is provided by SWIFT, the traceability that you have for the payments, all this can really be integrated all together and look at things in a more holistic view. Having a platform, we're working with our customers where we have an API, agnostic API-driven platform, which is completely data-driven, using AI to collect everything together and look at trade-based financial crime in a different way. Not only integrating payments with compliance, it's integrating payment with compliance and every other building block within the trade ecosystem. So this is very important, and we need really to look at things in more holistic ways so we can benefit and capture the value. And I can see that the banks, they are terrified from the risk of trade-based financial crime. So, but there is a huge opportunity that you need to capture, and there is a huge opportunity for everyone. We just need to really benefit from digital payments information and other information, so we don't really outweigh all these advancements by being exposed to a compliance risk. So all these things has to work together nicely.
Deya, one line from you to summarize.
Yeah, I would say the same. Do not miss the opportunities that the digital payments are providing to everyone. Do not lose the benefits of digital payments by exposing yourself, because digital payments bring another risks that you need to look at it as well differently. So you need to look at this in a more holistic view so you can capture the value that you wish to capture.
Thank you, guys. Well done.
Thank you.
you.